Ladies and gentlemen, welcome to Friday. I hope you all had a fantastic week. A lot went down from FOMC meeting, quad watching today, other events that transpired throughout the week. I mean, it was a very busy one. I hope you all were safe, keeping your accounts from blowing up. All right, and yeah. So if you are enjoying the content that I've been putting out, I would appreciate if you subscribe to the channel, hit the thumbs up, smash it, do whatever you want with it, but just click it. Okay, hit that bell button so you'll be notified when I upload these videos every day, Monday through Friday. Okay, as we review the wave counts for the S&P and the Nasdaq, or the SPY and the Qs. Occasionally we'll throw in a couple other individual charts from our members requests in the Discord group. And by the way, if you want to join our group, the link is down in the description below. It's a 14-day free trial. Have a look, and it's pretty good in there. A lot of people there have been having a good time trading the markets with Elliott Wave, as it helps you become very disciplined in the markets and wait for opportunities as they unfold, rather than just trying to hit every trade. I mean, some traders that works for them, but for us, yeah, that's not the case. Our edge is patience, our edge is discipline, and that's what we are always falling back on. So without further ado, let's see what happened here in the SPY. So as you are very well aware, the SPY and the Qs are now have topped in the third wave, and we're now rolling over. Okay, this is not to say that we've topped in the entire wave structure, because we're still looking for one more leg push into the primary degree, wave one, before we actually set in the larger corrective move, which is the pullback into wave two of the primary degree, which is the largest degree, or one of the largest degree, okay, in the daily time frame. But before that sets in, obviously that's we still have the fourth wave, and then the final fifth wave of the minor and the intermediate degree to deal with. Okay, now another thing that I want to point out to you guys here is this trend line that we've established since November, the low of November or October. I think here's November, this candle here is October the 30th. All right, we've been bouncing off of it, we've been defending it, but now we've trading lower and we broke below it. Okay, we tried to defend it in this area here yesterday, and we gapped down today. So that's already telling me that the wave 3 has reached its top. Okay, there's a couple of fib levels that are already in play that are telling us that this is the case. Okay, now what can we expect for the following week? What I am anticipating, guys, is that we are going to see further pullback into a corrective wave 4, which in nature is very tricky, is very hard to spot the changing trend. So we're gonna have to take it a day at a time. But I've always said this, that as long as we remain above the previous wave 1 of that same degree, this interpretation stays valid. Okay, so we have a lot of room to go on the further downside, but I'll point out some levels using Fibonacci, our Fibonacci tools and retracements to identify those. Okay, so all right, so from the daily time frame, we go down to the 1 hour time frame, where we see our orange degrees play out. Okay, so from the low of March, okay, we go up in 1, 3 wave pullback into the wave 2. As you see here, actually, let me turn this off for us, and here we go. We have this trend line that I've already outlined to you from the daily time frame as we held support. Then we found the fib level. We go up in 5 waves to the wave 3, A, B, C pullback into the wave 4 at the 38.2% retracement, which again comes in confluence with the trend line support. Then we started heading higher, but as you notice that this wasn't at all super vertical, if you will, right? This was pretty much sideways, boring type of nature, and it was pretty difficult to sort of establish a reliable wave count here. And this is exactly what we were expecting, or we were waiting for, a direction, right? Either to the upside or to the downside. It so happened that we came to the downside, and so when this occurred, then it was sort of like a clue, right? Or evidence that, not a clue, evidence that this was already the top. So the wave 5 in the orange degree has set in, and then the wave 3 here established. Okay, obviously this was our new high, and now we're heading lower. Okay, so let's zoom in here and let's establish these levels that we're looking for. So The wave 3 topped at, let's see, 425.45, which is the high. We sold off. We try to hold this level here, our previous high of 422.90 as support, but we broke below it. Okay, and now it acted as resistance. Being that it was resistance, guys, okay, the following day we gapped down. So when you see gaps in the charts, that's acceleration, and that's indicative of an impulse wave. So wave A, so always remember this, guys, in a corrective structure, okay, whether it's the wave 2 or the wave 4, all right, there will be impulses, right? There will be the wave A as an impulse, and then the C wave. The B wave will be its retracements, okay, or the correction for the previous wave. When in the case of this one, of the zigzag, right, the wave A is made up of 5 waves. Then you retrace 3 waves up, and then you go back down in 5 wave sequence. Okay, that's the nature of a zigzag. So that's what we're seeing here. Taking you down to the 30-minute time frame, we can start noticing that is the case. So we go down in 1, up in 2, acceleration gap into the wave 3, which found support at the 1618, and now what we're looking for is a push back up into the wave 4. Obviously, as I said before, right, the wave 4 cannot go beyond the territory or the extreme of the wave 1. Otherwise, this whole interpretation becomes invalid. So our upside target here in 3 waves of a corrective move will be at the 38.2. I think that this is the case. Okay, we'll see that coming into tomorrow. I mean, as you see here, we sold off into the 1618, so that's pretty impulsive if you ask me. So once we see a pullback up into the 418.62, we can then expect we'll expect another 5 wave move down to complete the wave A, but not until we see where this potentially tops. We can establish a theoretical downside target into the wave 5 of the white degree here. Once we find support here, we're going to see a 3 wave pullback into the upside on the wave B. All right, normally the wave B comes into the 50%, the 786, or even the 1272. But again, we won't know this level here until we see a bottom in the wave A. All right, so I think that by next week, middle of the week, we will see this level. All right, we'll see the wave A, and then we'll establish the upside potential targets for the wave B. At which point, guys, we can potentially, I'm not too confident in this, but we probably will have a trade opportunity into the wave C, because sometimes wave C's, if we get lucky, if this is a zigzag, then yeah, we can expect 5 wave move. But sometimes the wave 4 gives us different these corrections morph, okay, and we have to be very careful with that. All right, so but the good news is that we can establish a potential theoretical target or a range for the wave 4 pullback. So this range will be sort of like this more wave correction rather will set in within the wave structure, or within the range of the wave 4 at the higher degree. So this range is going to be between the 23.6 and the 38.2% retracements of the wave 4 in the blue degree. So where did I get those levels? Just so you guys know, these levels came in from taking the retracement from the wave 2 to the wave 3, and you get these 2 levels. All right, so this interpretation is valid again just as long as you remain north of the first wave. Okay, so take note of these levels here, ladies and gentlemen. Take note of these levels. So support levels to the downside of the wave 4 could be 411.85, 403.82. Should we find support here, then upside levels to hold are going to be 422.90, 425.45, and then potentially we'll have to make our way up above the trend line here that we have established as resistance. As you know, once it breaks resistance, it could become, once it breaks support, it could become resistance. All right, guys, so I hope that's clear. Pretty exciting stuff coming into next week for the indices. Again, look, I don't want you guys to get this idea that you've missed the train, you FOMO'd, and now you have to establish a position now. Okay, be patient, because once it's not to say if you see this label all the way up here in the 5th wave, it doesn't mean that that's where we're heading. Okay, that's just theoretical space here. I'm not establishing an upside target just yet until we see the low wave 4. But wave 5s could truncate. Okay, wave 5s could be shorter. They don't have to be like the third wave, where the third wave is 100% extension of the wave 1 or beyond. All right, at the very least 100% extension. Wave 5s could be truncated, wave 5s could be shorter than that. So once the wave 5 sets in and then that becomes a primary degree wave 1, you'll get that pullback, and that pullback is going to be steep, or deep I should say, and that's where we are going to find our good opportunity for establishing long trade opportunities and investing in stocks rather than trading them. All right, guys, so be patient, and our time is coming if you've missed the boat from the March lows of 2020. All right, enough said with this. Let's dive into the Qs. The Qs now are in a similar situation. There's a little bit more clarity in the Qs than there is in the SPY, but let's take a look. So over to the daily time frame, the Qs have also established that trend line that we saw on the SPY. All right, let me zoom in here. Let's get this chart nice and steady. All right, so we've established that trend line from September lows. Remember, in the SPY we established it in October. So we rallied up to the third wave in the intermediate degree, sold off in the wave A, found support, actually right before we found support here. Let me highlight this for you. Support here, and support here. Unlike the SPY, the Nasdaq has not broke, or the Qs has not broke below it, nor we've tested it. Okay, so that's something that we are going to look forward to. Now, from the February highs, 3 waves down into A, 3 waves up into B, 3 waves down into C of the wave 4, which came in at the 23.6% retracement. So shallow wave 4, but it's not out of the question. Then we found support at the 618, okay, of the wave C in the blue degree. So 2 levels of confidence confirms that this was a zone of support. All right, taking you guys down into, actually before we go into the smaller time frame, so yeah, so we still have further upside. So where we have the wave 2 pullback here in the Qs, it is wave 4 pullback in the SPY. Okay, so if we look at the larger time frame, and if we look at the sort of larger picture, or the bigger picture rather, okay, you start to see that the Qs is going to lead the way up, or as it stands right now, given our Elliott wave counts. Okay, and the SPY is the one going to be lagging, because the SPY will probably be the one to be the first to top out, and then we get the Qs to top out, and then we get the retracement or the pullback that we're looking for. Okay, so right now we're looking for the wave 2 pullback. Maybe we'll get a retest of the support trend line here, maybe not. So let's take a look. The 1 hour time frame will let us know. So from the 4th wave low, okay, we go up in 1, ABC pullback into wave 2, which was almost 100%. Remember, wave 2s can go up to the 100% extension, or retracement rather, of the wave 1, but they can never go beyond it. Otherwise, that interpretation is invalid. Okay, let's zoom out. 5 waves up into the wave 3 at the 1618, 335 spot 51 level, spot on. So this retrace or extension, sorry, we got it by doing this, right? We measured the wave 1 versus wave 2, and you get an extension to where wave 3 could land. So wave 3 was beyond 100%. It actually stopped at the 1618, which is another common level. Once that top was in, 3 wave pulled back into wave 4 at the 38.2% retracement of the extension of wave 3. Then we go up in 5 waves. And remember, yesterday we were discussing the fact that we found resistance here at this trend line, as I have outlined here, resistance in the trend line. That also came into the 100% extension of the wave 5. Okay, and once we top there, this is the way I'm looking at. All right, yesterday I was a bit confused, or not confused, but sort of on the fence, against the fence, as to what the wave count would have been. I thought perhaps this was the top in the wave 1, but we're gonna go with this interpretation. So we have 3 wave pull back into a wave A, 3 wave pull back into the wave B that stopped at the 1272. Okay, it's a beautiful, beautiful, beautiful example as to the B waves trapping the bulls over here, right? Because we took out the previous high, and as you notice, the 1272 is often overlooked by traders, and then we find resistance, and then we gap down. Okay, so this gap is confirming that we are going to see further downside. Okay, so let's review levels and let's prepare for what's going to happen next week. All right, let me take this out the way. Let us hide this wave over here and let's take a look. So the wave 2, as I said before, can come in anywhere between the 23.6% or the 38.2% retracement. All right, and these levels were taken from the low, the origin of the wave 1, and then you get these two fib levels here. Oh, and by the way, speaking of fib levels, happy Fibonacci Day. Okay, if you get that joke, you'll laugh with me because today is June the 18th, and get it, the 618. Ha 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 ha. All right, never mind. It was a funny joke I saw online today. Anyway, so okay, that was funny. Anyway, so going back here in this chart, let's get serious, guys. Let's get serious. So 3-wave pullback or 5-wave pullback into the wave C is what we're looking for. So support levels will come in at the 337 or the 333 spot 58. Upside resistance will come in at the 1272 or the previous high at 326 spot 40, and the trendline resistance zone that we've already established. All right, guys. So once we set this in, then yeah, we'll see what happens, and then we'll take advantage of the third wave, which is going to present to us a great trading opportunity. All right, guys. So that's it for today. I hope you guys had a fantastic trading week. Please relax during the weekend. Enjoy your time off with your family and loved ones. It's pretty nice out here in New York City, so it's going to be beautiful weather. So subscribe to the channel, hit the thumbs up button, smash that like button, hit the notification bell so you'll be notified when I upload these videos. As always, I appreciate every single one of you. Thank you so much for your time. Subscribe to the channel. If you want to join the team, the link is in the description down below. We're running a 14-day free trial. And yeah, love to see new faces. Take good care of yourselves, and happy Fibonacci Day. Take care. Bye-bye.